Hey there, Mike Sather here with Union Home Mortgage. In today's video, I want to just briefly touch on seller contributions. It's a great tool you can use as a buyer to help yourself lower your closing costs, potentially get a lower interest rate and cover some of those items that otherwise you'd be spending out of pocket. So how it works basically is when you're making an offer on a property, you're working with your real estate agent, you can negotiate to have the seller pay for some of your closing costs. Depending on the type of loan, they could potentially pay for all of them, whether it's a conventional loan, whether it's an FHA loan, whether it's a VA loan, or potentially a USDA loan. Now keep in mind the contribution limits for each of those loans varies depending on how much you're putting down. For conventional loans, there's a range of anywhere from 9 to 6 to 3% that can be covered by the seller. FHA is 6, and VA is typically 4, and then USDA is typically 6 as well. These are the limits that the seller is allowed to contribute towards your purchase price, which is great because then let's say it costs you $15,000 to come into closing. That seller can potentially pay all those costs and reduce your out-of-pocket expense. Even better is if they can potentially pay that towards maybe buying down your interest rate. A lot of different options that are available. I'd recommend you reach out to me directly if you have further questions on it. It's a great tool to use to really enhance your buying power and keep your costs as low as possible. Now, there is some new material coming out, obviously, because of the NAR settlement that just came out, that's just passed for August 17th. Seller contributions is going to play a role in that, and how that impacts that is something I'm going to cover in my next video. So in the meantime, please reach out to me if you have any questions, and I'll talk to you soon. Bye-bye.